Hey guys, this is Abe, and welcome to a new video for the daily recap here for October 5th and for the plan for October 6th. And we'll go ahead and start looking at the chart here at the S&P 500 ES and to see how the day started over here. This is where we opened, basically, the market open right around 38, I'm sorry, 37.57 or 56 or so. We moved right up to this little resistance line that we have over here, and from there we started a sell-off down to the 37.45, which is the retracement that I was talking about yesterday, and we were expecting. I kind of wanted to take a long here in this area, but when I saw that we broke the 37.45, I figured might as well try to wait and see. Maybe we can catch the 37.25 area. We might start like a long position there. However, that didn't happen, and they bounced, and the bounce was really nice. Um, Initially, we had this purple line that we talked about before from the broadening formation that we had rejected there and came back and ripped right through it. Um, you know, I personally, when I first started the day, actually, I took a long on SPY over here at the open and I closed it right over here, right at the top. It was a nice 30% win. And after that, I did not trade SPY or SPX. However, I took a trade on Tesla, which we will look at the chart here in a minute. But here for ES, I'm going to go ahead and go to a larger time frame to the hourly. And again, I apologize for all the lines. Just try to focus on the chart itself if you can. Um, let's go ahead and put these back here. And as you guys can see, all these lines mean something. So the main thing for us right now kind of reminds me of this area over here, back in the beginning of September, if you guys remember, before the CPI report, where we broke through this resistance over here. We continued and until we reached the area of resistance at 41.73, and we, you know, dumped from there. Was that the CPI area? I believe that's what it was, yes. So anyways, what are the levels that we need to watch for tomorrow? Well, obviously, for a pullback, right now we do have a low over here sitting right around 37.35, still 37.35, 37.25 area, still kind of area of significance. And we need to watch for it. Well, first, to the downside, if we are to sell off tomorrow, your first warning sign is going to be the loss of the 3780. Obviously, 3800 is, going to be your first trigger, but like I think this is kind of the level that I want to watch for, somewhere around 3780 or maybe even 3775 or so. If we lose this area, there's a chance we come back and test this area over here at 37.45. From there, you're going to have to watch for this low right around 37.35. And of course, if we end up taking this line of support over here, your next target down is probably going to be somewhere about 3700. Definitely don't want to lose that level. I'm not sure why this line actually moved down here. I'm not sure. I may have lost one line. But either way, I'll go ahead. I think I had a shaded area for the 3700 area. And the main significance for it, as you guys can see, it's whole number, 3700. There's going to be a lot of buyers probably there. There will probably be some sellers that are covering in that area. And also we see a little bit of reaction here in this region. So could be 3700, 3690 area if we make it that far low. And that's again if. However, my lean for tomorrow is that we continue being bullish. So, today I didn't expect to have fireworks like I was saying yesterday, uh, but we did have this little rip that we had, and overnight we actually moved really nice. If we go switch to the daily candles after we opened, we've already moved a good 22 points, I guess, from the low of 37.91, and we hit a high. Actually, it's a little bit more than 20 points. We hit a high of 38.1950. So it's about 9.19, about 28 points. So it's not bad at all. Between now and tomorrow, obviously, market open, anything could happen. However, tomorrow, what we need to watch for, even if we break right above this level over here, let's just say we stay in this region here overnight, we retrace a little bit to the downside, we come back and break. If it breaks the 38.20, the first target above is going to be somewhere about 38.33. Let's just call it 38.35. This area is going to be a key level over here for us. So why is it a key level? Well, previously we've had the reaction here in this area, obviously, and that was in back in July, on July 18th. And most recently, I'm going to go ahead and move it to the tip of this candle right over here, 38.33. We had a rejection over here from the drop that we had from the CPI. We came back and rejected over here. So there might be a rejection in this area. There might be a rejection in this region. And so you need to be careful for it. How, on this, once we hit there, you're going to have to be careful. So if you, let's just say we pull back a little bit, come back tomorrow, break above this 38.20, you probably want to start securing profit right over here. But from here, there is a chance if we break that we continue moving to the upside. And if that happened, the next target to the upside will have to be somewhere about 38.50 to 38.55. It will be somewhere over here. That would be your next target up. And again, the reason why I'm using this as a target is because obviously you have this reaction in this area. And if that even gets taken out, then you'll move to the next target up, which will be somewhere about 3,900. Now, is 3,900 going to happen? Not sure, but uh, I would say 3880 is probably something that we might see. I wouldn't be surprised if we saw it. So to open with a gap up tomorrow morning, it's not going to come as a surprise for me. Definitely, you're going to have to watch for the market net flow to see how the sentiment is going for the market. Personally, just from the setup over here, we had the little pullback. We held really strong. We didn't even retrace much in this area because if you remember yesterday, I was saying if we broke when we drew the volume profile that we had a skinny belly area is what we called it, and that would have told us that we'll just fall right through it, right? I'm going to go ahead and do like the fixed range volume profile like we did yesterday. If you guys can see how we broke and fell through this area, we probably would have went down to this region over here to the next volume node. Now, we are looking to the upside. Overnight here, we're breaking over this yellow line, which used to be a resistance back in August and even towards the end of August. And even though it was not exactly to the line, but it kind of formed a resistance, sort of like a downtrend channel, sort of. So I would be very, very cautious uh, right around here. If we break above that, I think we're going to try to test this high up here. It may not all happen in one day, but like I said, my lean to this is going to be bullish. Bears, they definitely need to break the previous low over here, somewhere around 37.33. They need to break below it, and from there, they need to probably come down and break the 3,700. I don't know if that's going to happen right now. We are having somewhat of a relief rally. Um, unless the overall geopolitical environment goes against the market, causes the market to crash or something like that. Personally, I don't see a huge pullback. There has to be some kind of a catalyst. But one thing that we really need to pay attention to tomorrow morning is that we have the jobs report. And so I said that in a previous video, and I would say it again. The Feds would like to see a slowdown in the job market because they want to see that the raising of interest rate is slowing down growth, and so it's going to have to affect employment negatively in a way. If you have positive news from the unemployment, even though it's really good for the economy in a way, it's not. It's sort of like a catch-22 because yes, people have jobs. We want to see people have jobs. We want to see people working. We want to see unemployment dropping. But at the same time, for the feds, they're thinking we need to slow down so that we can control inflation. And whatever we're doing has to work. And for it to work, we need to see this effect on unemployment. And so this is going to be in news tomorrow. And if I'm not mistaken, I think that's the jobless claim report is the only main thing that happens in the morning, and there's a couple of Feds scheduled to speak after market close, so I wouldn't be too concerned about that since market will be closed at that point unless you're swinging. And then we will talk about Friday's events. On Friday, I think is the non-farm payroll report coming out on Friday. But as far as tomorrow, I would say the jobless claim report that could probably set the tone for today. So just keep an eye on the market before open and just pay attention to the levels and be careful. We've had Thursdays where they acted like choppy days, like Wednesdays do normally, which I expected today to be one of those days. You know, just always keep that in mind. You want to see some volume coming in, you want to see some volume moving, you want to see some levels breaking. That's how you try to, confirm that, okay, well, this is probably a good day to trade. Another thing that we use is the market net flow, and it tells us a lot about the flow for the day and how things are going. So I'm going to go ahead and switch on to it. Um, And going back to where I said, like I took my long at the start, like at the open of the market, calls seemed like to be a little bit on the higher side, and I just took my profit right on the first resistance that I saw, just because I thought, okay, well, if it doesn't break, obviously we're just gonna pull back. We are due for a pullback, so it was kind of risky. I didn't even signal it. I just played it on my own, and then the market started dropping. And as you guys can see over here, we have what we call the a bearish cross where you see the puts volume starts increasing, crossing over the calls, and the calls decreasing, crossing below the zero line. And what you want to see for a bearish day, you want to see sorry, can't speak. You want to see the puts moving up and calls moving down. Now, it wasn't until towards the end of the day, and you just have to keep this in mind, that we kind of remained with high put volume. That was the other reason I honestly didn't attempt to take a call today, is that you had a high put volume relatively to the calls. I mean, the calls barely crossed above the zero. And so this is a cumulative net premium over here, the scale, right? So we hardly had, you know, the calls crossing above the zero. It wasn't until towards the end of the day where it started climbing up a little bit. But overall, you guys can see this thing continue climbing up. And so I wasn't trying to go against the current or swim against the current because you know that pullback or that rip could have been easily like a liquidity grab and then another drop would have hit again. So just wanted to be kind of on the cautious side. As far as the delta cumulative exposure over here for the market, this, if you can even see it, is the candle that printed for the day. It is barely there, barely red. So it started red for the day whenever, we saw the puts coming in. And then whenever the call started, coming, it switched to a barely green candle. And by the end of the day, we closed with this barely red candle. You can barely, barely see it. And so it's really not giving me a whole lot. Um, you know, it's it, it's just one of those things that I like to usually watch. Usually, green candles indicates for the more likely that hey, the next day could be bullish. Or if it was red, that probably the next day is going to be bearish. Obviously, you have these days where you have red and followed by green, so you just have to keep your technical analysis, intact and kind of works better on trending days, in my opinion. When you're, let's say, in an uptrend, you see some calls coming in, you probably think, okay, we're still in an uptrend. We're just gonna do better if we take calls, especially if you see a high green in the DEX histogram over here that we have. But for tomorrow, I mean, this is not really telling me a whole lot. This is barely red. I'm not sure, you can use it for anything. But the main thing that kind of got me here today is looking at the market net flow here. It, despite the fact that we ripped, I mean, we've had days where it was switched from red to green, like you would have had a bullish cross or so. We didn't see a bullish cross today. And well, at least we didn't see a bullish cross towards the end of the day, even after this whole rip that we had. And so, you're still in a bear market technically, and so these rips usually are these, I guess, call them relief rallies. They're pretty nice when they happen. They really are. So, but you just have to stay careful and you stay vigilant in the market. Always make your targets realistic, achievable, so you can actually secure your profit. Not every day is going to be a 100% winner. Not every day is going to be a 500% winner. Some people do great in some trades, but that's okay, but that's not every day. And usually, people that hold for long periods of time, hoping something is going to happen, end up getting slaughtered. There's a pretty famous saying in the stock market. They say bears get paid, bulls get paid, and pigs get slaughtered. No offense to anyone, but as you guys can see, today is a perfect example for that. If you were bearish, let's just say you took a bearish move over here, and let's just say you covered over here, you got paid. If you were a bull and you took a call here on this pullback, you definitely got paid. But if you were someone who held on to a call, I'm sorry, like to a put on the drop of the day, and you just thought that you're going to hit another 100%er or 200%er or whatever, like these calls that you had the past couple of days, your profit would have turned into loss. And so that's why I always say trade levels, and it's okay to miss out on the rest of the move. Just plan your trade your plan. You'll always end up on top. Now, let's take a quick look at Tesla here. It was an interesting day today for Tesla. I actually did take a trade on it. Today, one of the things that I noticed on Tesla, well, first of all, it caught my attention whenever it broke below the $241. And I'm going to go ahead and switch to the 5-minute chart. And I actually entered after we broke this level over here. And as I told you before, if we wanted to take a call on it or whatnot, I thought like, okay, well, maybe at 237 or a little bit lower, you would have a better chance taking a call. But at the same time, I thought this morning, okay, well, this is a red day, so might as well take a put. That's what you look for on red days. That was whenever ES was dropping. You usually, whenever you want to look for, if it's a red day, you look for puts. If it's a green day, you look for calls. Don't try to play against the market, even though it may pay off. Like ENPH today just dropped massively, and people made tons of money that were short, the ones that were short in it. However, on the other hand, eh, you know, if today was a green day, for example, like we're ripping and everything was looking great, even if ENPH was dropping, personally, I wouldn't be looking for entering a put on a green day. It's just you will have less chances of success with that than if you would look for a call on a green day or a put on a red day. Just keep that in mind. It really helps, kind of like helps with your psychology. Whenever you're trading, you'll be with the current, and things will look better. But anyways, to get back here at Tesla, I did not hold it for a very long time. As a matter of fact, like I said, I entered once we closed below this level over here, which was the low of October 3rd. And I thought, okay, well, 237 will be a good target over here. And the thing that also kind of got me jumping on it is that I was looking at the options flow, and even the option flow for Tesla was actually looking red. I'm going to go ahead and I'm going to actually move it over here to the screen so you guys can see as well what I was looking at. Um, but I was seeing some puts coming in for weekly. Usually I have these option flows, the ones that we see live. I usually have them on short expiration and as well as non-spread, so that it actually gives me a little bit more of a clear picture on the immediate move that we're going to have. And let's just go ahead and move the flow chart over here real quick. I'm just gonna make it a little bit smaller here so we can get to see the chart as well. So as you guys can see, the flow was pretty bearish on it. It was going with the market when the market was dropping down. We broke below this low over here, which, seemed to be an issue previously. They came back over here, they rejected, but they came back again and they broke. So I waited for the break and hold below this day. This is the thing. When we say something broke below a level, it's not that it touched a lower low than that day. It could touch it, like barely tap it and rip back up. You have to wait for a close. Like basically the price has to close, whether you're looking at the 5-minute candles if you're trading 5 minutes, 15-minute candles if you're trading 15 minutes, and so on. And so I was looking at the 5-minute chart, and we closed below and actually did enter put over here. And as you guys can see, we've had a little bit of a chop over here, and that kind of upset me because I was thinking, okay, well, this is kind of destroying the value of my contract because of the chop. We don't want to have an IV crush, that's the last thing we want to be having, to buy on higher IV and sell on lower IV. You lose money this way anyways. Um, but what I noticed and what kept me in the trade, even though we came back here on this candle, if I want to make this thing a little bit closer, this green candle, or blue candle in my case, failed to actually hold above this level. So first we closed below the low of October 3rd, and then we came back up, we failed, and then tried again, we failed. So I said, okay, well, this looks good. So we dropped again, and at this level over here, when I saw this drop, I thought, okay, well, we are getting close to the target, which would have been 237 or so. And but at this point, I felt like, okay, well, we are up a little bit. I'm just going to go ahead and secure profit on it. I really would hate to chance or take a chance on this ripping. Like you see this candle over here, this could indicate that this could reverse. And so normally I don't trade candle patterns or stuff like that, but it's okay to look at them. It's good to look at them. So this could indicate that this could have actually reversed. And so why would I be in something that even if I made 10%, 11%, whatever it is, percentage wise, it's good. 10%, 15, 20%. If you do that consistently, that's money. That builds your account. You stay consistent. However, we don't want to be like the pegs that will hold a put and hold on to it, and then it rips back up, and then you end up losing money. So prudent dictates that you secure profit while you're ahead, and you don't have to technically hit that target, especially when I was seeing over here as well that the volume, as you guys can see, also, even though it was going, kind of strong, but we're still going kind of like in a little bit of a downtrendish over here. You see volume is slowing down, and it's Wednesday at the end of the day. I just thought this is usually choppy day, so I'm lucky to have such a move. So I'm just gonna go ahead and secure profit, and that's what I end up doing. This thing ended up actually doing pretty decent. The contract that we were in, we got in at like 135. It ended up hitting like 250 or something like that, if I'm not mistaken. But again, I'm not going to risk it. I would rather take 10, 15% and run, because if this thing flipped and went the other way, yeah, you know, I don't want to be on the wrong side of it. So 2 for 2 today. It was pretty nice for me. I can't complain about it. Let's take a quick look at US dollar index. Uh, this thing was pretty nice, as a matter of fact, with this move over here. However, I will be very cautious here at this point because again, we said this area over here forms somewhat of a support, looks like, okay? So we didn't exactly touch this level over here when we started reversing, but as ES is going up and the US dollar index, not that they go in opposite of each other, but usually if the dollar is very strong, you will see that it becomes like a safe haven. All of these people were going, putting their money into US dollar, selling equities and buying US dollar, that causes it to go up. And so at this level where we're sitting over here, as you guys can see, there is a little bit of a kind of a demand area over here. So we might have a pullback somewhere over here, and from there we might bounce. And actually, this depends on what type of trader you are. If this thing actually bounces from here, you can try to take a long in this area and have your stop loss somewhere below it. You could probably try to enter somewhere around 110 440 or even 110 450 if you'd like, and you'll have your stop loss somewhere around right below the 110, and thinking that the move could look something like this, with this being the small demand zone over here, where we come and tap it and move back up. And in this case, this will be your first target, and you could probably take it all the way up here as your second target. The second way that you can trade this one is that if you want to be a safer trader, just wait for this move to happen and wait for the break of this level. Once this level breaks, you can take it from here to here. And that would be basically your first target. And you can obviously leave runners and move all the way up here as your second target, somewhere up upwards of 113, let's just say 113 300 perhaps, or 290, and upwards of 113 789, let's just say 113 700, just to be safe. Whole numbers usually work pretty good. And we'll see if that goes, keep going. If you would like to trade this and you trade options and you don't trade futures, or you don't trade Forex, where you can't have access to Dixie, what you can do is look at UUP, it's the ETF for it, and right now it's sitting right around the $29 or so. It doesn't move a whole lot, so basically your moves are going to look something similar to this, but it's going to be in smaller amounts. So basically, you'll just take it from like 29.50 to $30. About 50 cents move is a pretty decent move on it. Traders just usually take it, and you can leverage quantities in it if you would like, and so I think that will be a decent trade. Um, but yeah, that's about it. I'm really exhausted. I have been working a lot today, worked a little over 14 hours total, and I traded at the same time. If this is your first time watching this video, please consider subscribing and liking and commenting on the video. If you have any suggestions for improving the content of the video, please let me know. I would love to do that. I'm not really a YouTuber, nor do I aspire to be. I just do this as information content for you guys. And if you would like to trade live with us in Discord, I will have the link to the Discord in the description below. We are running a special for a free month for new users. Just come and join our Discord. You'll see the details over there. If you guys have any questions in Discord, please feel free to DM me or tag me in the chat. I will see you guys tomorrow morning. Bye.